Right. Okay, guys. Good morning and welcome back. Hope you guys can hear me properly, right? Okay. So let's start the class. I'm audible, right? Yeah. Okay. So under uh, first chapter, under second chapter, we fully finish first part, which means business documentation, and third part I have done. Uh, you know uh, Double entry system and bookkeeping, as I can remember. So introduction to bookkeeping and double entry system I have done. So under that double entry system I have done. Then now I'm going to start the second part, books of original entry. Right, in your book write the heading books of original entry. Right. Okay, so the double entry system now, debit and credit. You have a clear idea what is the term called. I told you asset and expenses, increase debit, decrease credit, right? Liability, income and equity, increase credit, decrease credit, right? So now let's go to the here books of original. I have done this, but I'm going to repeat it again from the beginning. So under this, what are the learning objectives? Explain the purpose of the books of original entry. Prepare the following books of original entry. Purchase day book, or another word purchase journal. Sales day book or sales journal. Purchase return day book, sales return day book. 3-column cash book, petty cash book, general journal. I'll explain one by one properly. Getting started, right? So the books of original entry provide a convenient way of entering transactions into the double entry system. Now up to now what we have done, right? Up to now what we have done, once the transaction happened, we just recorded in the ledger, or another word, general ledger. Right? We discuss about the books of original entry. So I told you once the transaction happened, we prepare just the business documentation. This is the source document, business documentation in the first part, right? So this is the part one, right? So part one, and in here we have what we have done. We just recorded in the ledger or the general ledger, ledger or the general ledger. See the part 3 of the section. But this is not the correct way. Why? Now this is just the evidence. Source document is just evidence. Now think you are going to the Pizza Hut and you are going to purchase the pizza. When you purchase the pizza, they issue a business document as they receive the cash. Is it clear to you guys? Right? So, and the ledger or the general ledger is the place where we maintain all the T accounts, right? And there is a matter with that. If we need to take the decisions, we can't take decisions by looking at the ledger. For an example, think right? When we take the sales journal, right? So both cash sales and credit sales comes on the credit side. I told you. Think about cash sales. We receive a check, bank account debit, or cash account debit, sales account credit. If we take the credit sales, debtors account debit, trade receivables, I'll write trade receivables or debtors account debit, sales account credit. Both cash sales and credit sales comes under credit side of the year. Now think the manager wants to know last month. Let's take the nearest month. August month, sorry, July month, total of the credit sales. Now now can he take the decisions by looking at the sales journal? Am I clear to you guys? No. So say sales account? No. Why? If the manager wants to know the last month total of the credit sales by looking at the BCD and BBD value of the sales journal, he can't take. He if now think the BBD value is 1,000, manager can't tell last one total of the credit sale is 1,000. Why? Both cash sales and the credit sale comes under sales account. Easy clear to send me a thumbs up. Because of that, to avoid it, turn on the videos and wait both. I prefer it, then it's good. Because of that, now what we do in here, we are classifying similar types of transactions into similar books. After that, we record in the ledger. That is the procedure, right? Now from here in after, right? So what is the procedure? Once the transaction happen, right, we prepare business documentation, business documentation as an evidence, and after that what we do is we record in the books of original entry, books of original entry, right? In here what we do, we record the transactions in similar types of transactions in similar books, then we go to the ledger for the general ledger, right? So we are adding a new part, books of original entry. In your level, what are the books of original entry? There are purchase day book, purchase journal. I'll take the short purchase journal, right? Sales journal or sales day book, number 3, right? So purchase return book, purchase return journal, purchase return journal, day book or journal, all correct, right? Number 4, sales return book journal, sales return journal. Number 5, 3-column cash book, 3-column cash book, petty cash book, petty cash book, and number 7, general journal, right? Number 7, general, right? But just remember, before recording transactions in the books, we need to have a clear idea about the books of original entry, right? So we discuss about the books of original entry part, right? So we discuss about different types of books of original entry. Hope you can remember. We discuss about these other things related with the business: purchase order, right? Then purchase invoice, purchase invoice, right? Then we discuss about sales invoice, right? Then we discuss about uh, debit note and the credit note, right? Debit note, credit note, right? So Then we discuss about remittance advice, petty cash voucher. Then we discuss about petty cash voucher, right? Then we discuss about remittance, cash receipt. Then we discuss about remittance advice, right? Cash receipt. So these are the things we have. Statement of accounts. These are the things we recorded. Is it clear? You send me a thumbs. After this, first of all, we need to prepare a thing now. Uh, thing source document or the business document. Then after that, we record in the business books of original entry. Then we record in the ledger accounts, T account. For an example, I'll tell you transaction when the business purchase goods on credit, business prepare a purchase. These things are not in order, right? I'll give it later. When the business prepare, when the business sell the purchase the goods on credit basis, there are purchase order and the other things as well. The main thing which I give to the supplier is purchase invoice once we receive the goods on credit basis, right? Then we record in the purchase journal, then we debit, then we record in the ledger like relevant purchase account debit, relevant suppliers account credit likewise. That's why now if the manager wants to know about the total of the credits purchases during the last month, manager just want to get the July month total of the purchase journal balance, right? That is the thing, right? Okay, write it and raise your hands fast. You can't see it properly, let me. Once you done, raise your hand. Once you done, raise your hands. Once you're done, let me know faster, guys. Yes, you're done. Yes, you're done. No, still ready.
No, sir, I'm done.
Done, right? Okay. Right. Now, okay. It, right. Okay. Let's see. Now, getting started, right? The books of original entry provide a convenient way of entering transactions into the double entry system. Instead of entering the transaction as they occur, business tend to collect the business document as a sales invoice over a period of time, then post them uh, in bulk to the books of original entry. Waiting to collect the business documents together is more efficient and more cost effective, like we can collect business documents few like within several period of time, like during several period of time, and we can record it at once all the things in the books of original entry, right? It's small businesses satisfactorily maintain their double entry accounts in one account book. This book is called the ledger. Large business, however, need a better system because they have so much financial data to record. Consequently, several books are used to record many different transactions, right? That's why books of original entry are there. So, books of original entry, a set of original entries where a transaction is first recorded. There are separate books for each different kind of transaction. For example, revenue or the sales is entered in one book, purchase in another book, cash in another book, and so on, right? So all transactions that are entered in the bookkeeping system uh, originate from the business document, such as invoice, credit note, uh, checkbook stub, paying slip, and so on. You know the term called books of originality, the accounting journal which business transactions are initially recorded. The information in these uh, is then summarized and posted into the general ledger. From various financial statements are produced. Business documents used when processing the sales or the purchase of goods and services. In chapter number 5 to 7, we will look at invoices and credit notes that are raised when goods and services are sold to customers. So, in chapter 5, uh, we will learn about the cash book. Cash and checks are recorded in cash books, right? I'll explain it, right? So types of books of original entry. There are several types of books of original that we'll be looking at this. Sales day book, used for different, used for credit revenue. Purchase day book, used for purchases. I gave a chart. Am I correct? I think Dinal was there. Yes, I can remember. I gave a chart, right? Mind map to remember it. Can you remember? Right? Yeah, I'm not going to give it again, right? So then sales day book, purchase day book, sales return day book, purchase return day book, right? So in sales day book we record all the credit sales. Purchase day book use we record all the credit purchase, right? Sales return day book, we record all the credit sales return by the customers. Purchase return day book, we record all the credit purchase returns, right? Cash book record all the cash receipt and payment. Now you can see in sales day book we record all the cash, all the credit sales, all the credit revenue. So where we record the cash sales, we record cash sales in the cash book. Why? First of all, we give the priority to cash. Understand? If there is any other credit things, we record in another prime book, right? So petty cash book used to record small items of expenditure. Journal used for other items, right? So these are the things. Ledgers. Details of transactions are first into the books of original entry, then the information is entered to the ledgers through the double entry system. Now you know the double entry system. This procedure often refers to the posting, right? So we call it as posting. Revenue transactions are posted to the receivable ledger. Purchase transactions are posted to the trade receivables ledger. Other items accounts are in here. Revenue transaction recorded, receive, purchase transaction recorded, trade payables ledger. Correct it as in your book. This should be trade payables ledger, right? So other items to the accounts are posted to the general ledger, trade receivables ledger. See below. Types of ledger. There are different types of ledger as shown below. The alternative names are shown in brackets: receivable ledger, trade receivables ledger. So shown the records of customers' personal account. You will learn this one in the uh, next step under control accounts. Payables ledger, trade payables ledger, shown records of suppliers' personal account. Nominal ledger or the general ledger, so contain the remaining double entry accounts such as assets, equity, and expense accounts, right? So I have done up to here as I can remember, right? So initially I have done up to here. All the business transactions, classify transaction, put the same type of transaction together. Credit sales entered in the sales day book. Credit purchases entered in the purchase day book. Sales return entered in the sales return day book. Purchase return entered in the purchase return day book. Cash receipt and payments entered in cash book. Other payments entered in general journal, right? So entered in double entry accounts in the various ledger. I'll explain this the ledger. You can have a clear idea. Still, you know only about nominal ledger, general ledger, or the ledger. But we categorize later as trade receivables, trade payables, and it's in the future chapter, right? Classification of accounts. I have done this part as well previously. Accounts are divided into personal account and impersonal account. Personal account, these are the accounts of people or business. Hope you can remember. Think we when we purchase the goods from Amal, we recorded as purchase account debit, Amal's account credit, right? So it's Amal is a creditor, so that is a personal account. Impersonal account includes all other accounts. Impersonal accounts are divided into real account and the nominal account. These deals with the professionals of the business. For example, possessions of the business. For example, building, machinery, computer equipment, pictures and fittings, inventory. Real account means asset. Likewise, these are things belongs to the business. Nominal accounts, expenses and income are recorded here. For example, revenue, purchases, wages, right? So electricity, commission, receivable, those things are nominal account, as we told, right? Personal account and impersonal account, right? uh, this way. Right. So impersonal account, real account, nominal accounts for the property of kinds. Nominal accounts means for expenses, income and equity. Now you have a clear idea. We have done this, right? Let's see now. Purchase invoice first. What is the term called purchase invoice? Now I'll give the mind map again later. When we purchase goods on credit basis to the business, we issue a purchase invoice to the suppliers. We purchase goods on credit basis from supplier. When we receive goods on credit basis, we give a purchase invoice to the supplier, right? Okay. When the business purchase goods or service from a supplier on credit, they are sent a purchase invoice. The purchase invoice lists the goods or services supplied. It also lists the price of goods or service. In the various chapter, we learn how revenue invoices are entered in the sales day book. Similarly, purchase invoice are entered into the purchase day book. The following information re-recorded. See what are the things in the purchase invoice. Date of the invoice. Now you are going to the Keels and purchases something. They are not giving you the purchase invoice, right? When Keels purchase some goods on credit basis, Keels issue purchase invoice, right? Goods net cost, total amount due. The supplier and the customer both require an invoice. The invoice shown in figure 4.4 was prepared and sent by Rivet Rugby and Football Cup for uh, their customers and German sports, right? Figure 4.4. Just wait. So, right. So figure 4.4. Let's go to the figure 4.4, the previous one. You can see in here we discuss about purchase invoice in here, right? You can see in here this way. Just wait, huh?
Sir, doing
Sorry? No, no, no need, right? Just see. I just want to show you. You can see this is the purchase order. So now you can see this is the purchase order, right? So now 4.3 this is, right? 4.4 you can see this is the purchase invoice they are telling, right? You can see this is the purchase invoice sent by River Rugby and Football Club to Gramson Sports, right? So that is the thing in here they are mentioned. So in 4.4, right? The supplier, the customer, both revenue required the invoice shown in 4.4 prepared on, and sent by River Rugby Club and football club to their customer Gramson Sports, right? In the you can see now in here their customer is uh, Gramson Sports. You can see now. First of all, just go to here. You can see now this invoice was prepared by River Rugby and Football Club, right? So it was sent to the Gramson Sports. Why? Now think you are going to the Pizza Hut and purchasing something. You know the concern in business now. Always there are two parties related to transaction, right? There are two parties. Now we can maintain accounts from one business side, right? So we can't maintain two business accounts at simultaneously, right? It's obvious. So now in here you can see the concerned business is River Rugby and Football Club, right? They are the one who purchasing goods from the uh, seller and buyer. Let's see who's the seller and buyer. Purchase order. Yes. Now the goods are purchasing from, sorry, a purchasing order sent by Gramson Sports to River Rugby Club, right? So purchase order sent from Gramson Sports to the River Rugby Club. So now River Rugby Club is the one who giving the goods. Right, right, right. Now it's like this. Look here. I'll explain the full scenario in here. You can go to from here, right? So right now you can see uh, Gramson Sports. First of all, look here, right? I'll take two things, right? So Gramson Sports, right? Gramson Sports, Gramson Sports, and the other one, River Rugby, River Rugby, right? Okay. Now, first of all, look here, right? Okay. Now you can see the purchase order sent by Gramson's. Now, first of all, hope you can remember the procedure, right? The purchase order was sent by Gramson Sports to the River Rugby Club. This one was purchase order. So now you can see before purchase order, I told you there is another thing, quotation, right? Quotation. Before that also another thing, inquire for quotation. Inquire for quotation. It's like this, right? I told you. First, see, check the scenario, right? Now, right? So it's like this, right? So it's like this. Now you can see. So the purchase order was sent by Gramson Sports to Revert Rugby Club, right? Okay. So Revert Rugby and Football Club and Gramson Sports, right? Now there's a matter. The thing I have done, I have raised many purchase orders, but they are telling in, just wait. They are telling in here, just wait. The supplier and the customer both require the invoice shown in for prepared and sent by Revert Rugby. Football Club, they are customer. Gramson Sport is the customer, right? So Revert Rugby Plus is the supplier. Look here, right? Now you know I told you. First of all, right? Look here. Can you hear me, guys? Send me a thumbs up, right? Send me a thumbs up. Now, first of all, what they do? First of all, customer inquire quotation, inquire about quotations. Inquire means customer asking supplier via phone call or email address. I want these things. I want these things. Football shirts and uh, football shirts. So from this quantity, right? What is the price? You best price you can. I want this much of quantity. So if the quantity is available with you, can you send me the quotation with the unit price? Then the supplier is sending the purchase order, right, to the customer. Then customer raising a purchase order. Now customer is collecting more purchase orders, not from here, not more quotations from, not from the Gramson Sports, but from other as well, not from the Revert Rugby. So from other suppliers also they collect quotations. Now when the Gramson Sports agree with the Revert Rugby's price, they raise a purchase order. That's why you can see Gramson's names in the first. So the supplier's name in here. Send me a thumbs up when the uh, Revert send in the quotations. Their name we can identify on top, right? Then the other thing, invoice. Now you know, right? In this thing, you can see there is a invoice, right? Invoice. You can see in the invoice. Now when the uh, Gramson raise a purchase order, Revert Rugby send the goods plus invoice, goods plus invoice. Look here, goods plus invoice. You can see goods plus invoice, right? You can see. Now this invoice is the sales invoice. Sales invoice. Why? Sales invoice. Why? So supply is the one who send in the goods on credit basis. Goods on credit basis. Right? Goods on credit basis along with the invoice. Now supplier sending the invoice called sales invoice, right? Why? He's the one who's selling the item. When customer receive the goods, right? Customer acknowledge it, customer send invoice, the customer raise purchase invoice. That is the procedure. Send me a thumbs up. Iris now supply sending. Okay, I'm giving this much of quantity like this as concerning your purchase order is the price. You will settle within days. You can see in here Revert Rugby Cup giving terms 30 days. Within 30 days, Gramson Sports need to pay the money. Understand? Right? So, okay, guys, hope it's clear to you. Now, when the Gramson Sports, you can see in here, the supplier and the customer both require invoice. Now, most of the time, when the supplier sending invoice, customer again not preparing another invoice. What customer does? Customer take a copy of this invoice of the suppliers, right? Take a photocopy, two photocopies, right? And put a seal on that as purchase invoice, because the same thing, right? No any changes, the same item, same price, because initially it prepared by the supplier and sending along with the goods. Then customer again need to raise a PO, but why the customer need to again purchase invoice? Why the customer need to again raise another same similar kind of thing? Am I clear to you? Send me a thumbs up, right? Now the what the customer does, customer just take two photocopies and put a seal on that as the on the sales invoice as the purchase invoice, and sending one to the supplier as they receive the goods, sending one to the customer's accounts division. That's the thing in here, right? So right, in the accounting records of river, rugby club and football club is a revenue invoice. Now you can see from the reverse rugby club, that is the sales invoice. Another word, revenue invoice. Another word, revenue invoice. Revenue means the sales are both are same, right? In the accounting record of grants and sports, it's the purchase invoice, right? Hope it's clear to you, right? Right. So can you write the heading purchase invoice? Write the first subheading, purchase invoice. Purchase invoice, and this is comprises purchasing. Write the heading about purchasing. Purchasing. This is the full procedure, right? Purchasing invoice, right? So just inquire about the quotation, then supplier sending the quotations, then customer raise purchase order. We call it as PO, right? Then customer send the goods along with the sales invoice. Our supplier send the goods along with the credit invoice, sales invoice. Customer giving the purchase invoice. I'll acknowledge. Draw it and raise your hand, right? Once you done, raise your hand. Yes, you're done.
Done, sir.
Right, right. So you can see this is format of the purchase journal, right? So our uh, purchase day book or the purchase journal, the format purchase day book. In here, the in account debit means DR, credit means yeah. Now they are first of all, now first part they are teaching in here. Now it's bad. That's why I did the third part and came back here, right? You can see purchase day book, right? So example of purchase day book. In total columns, the is posted to the trade payables control account. This is explained in chapter 15. I'll explain it later. Posting credit purchase to the payables ledger. Invoices are first entered to the purchase day book next, and the invoice is posted to the individual supplier account and payables account. At the end of the period, usually each month, the total of the purchase day book are posted to the purchase account in the nominal ledger, and double requirements credit each supplier in the payables ledger with the total of the individual invoices. Debit the purchase account with the total of the net purchase. Right. Example: posting credit transaction, trade receivables ledger, 11 things, nominal ledger under purchase account. Right. So the sequence of entering posting invoices in summarize 5.6. Right. I'll explain later. Now write the subheading purchase day book or the journal. Purchase day book and the journal. Purchase day book or another word, purchase journal. Right. I'll take 5 transactions, right? Uh, it's first of all, I'll write 5 transactions, then you can have a clear idea. Examples, right? Uh, Purchase goods on credit from, let's write few examples referring to this, right? Purchase goods from credit, purchase goods on credit, right? From different suppliers during the July month, July 2020, in Amara's business as follows, right? As follows, right? July 8, July 8 from Fuller and Sons, Fuller and Sons supplier. This is the supplier, the value, right? So this is 172.8 value, 172.8, right? Then July 14 from Queen's School. Write with me. Products 336. July 17 A. Lewis, it's 624, right? July 30th J. Mita, 84, 86.47. See the total, you can see. I know in the total as required, required. Number one, prepare the purchase day book. Purchase day book means we record only the credit, right? Purchase goods on credit. Purchase day book. Number two, ledger account, right? Right. Write the question and raise your hands. Then let's do together. I'll give you the full guideline. Write the question and raise your hands. I'll row all your raise hands. Now for any after one student raise your hand. Am I clear to you guys? Turn on the videos and wait. Hope you can hear me. Write the questions and raise your hand. Now first of all we prepare the purchase invoices. Now when the supplier send the sales invoice, we have prepared purchase invoices. Sometimes, most of the time, now when we issue business documents, there's a sequence order. But when we take suppliers sales invoice and when we take two photocopies, as I told you, and we use the same name, serial number. Now think you are going to the Pizza Hut and purchasing a pizza, and the number, serial number written in that, think 123. So after you, the next customer number is 124. Likewise, they are issuing in a sequential order. But sometimes in here there is no sequential order. Why? We take the same sales invoice and we take two photocopies and we giving it. If we prepare it, there's a sequential order. Send me a thumbs up if it is clear. Sometimes some businesses are preparing the same purchase invoice, right? Am I clear to you? Send me a thumbs up. Right. Right. So let's prepare the purchase invoice. You can see the format of the purchase invoice. You can see, right? So purchase day book. You can see the format of the purchase day book, right? Purchase day book. Number one, purchase day book, right? So you can see first we are writing the date, right? Supplier and the value. Right. This way. Right. Now you can see in here, right? So date, detail and the total. You can see we need date, detail and the total. Look here. Date. Don't write, I'll give you enough time. Date, detail and the value, right? And also there are three types of ledgers. Receivable ledger, number two, payable ledger, right? Now in previous time we recorded all the ledger accounts in the nominal ledger, even the supplier accounts as well. Am I clear? To send me a thumbs up, right? But okay, there are three things. Nominal ledger, right? Hope it's clear. But in here, all the payable suppliers names we record in the payable ledger, right? And the other things we record in the nominal ledger. For an example, let's take, right, first one. I write the year in here, 2021, July 8th of July, from Fuller and Sons. Value is 172.8, right? 172.8. So the supplier account we maintain at the same time, right, as Fuller and Sons, right? So at the suppliers account we open at the same time. You can see suppliers account. This is the trade receivable ledger, right? Oh, this is not the receivable. This is the payable ledger, because we are purchasing, right? So in here it's incorrect. Please correct it as trade payable ledger. This is incorrect, right? So Fuller and Sons, 8th of July, you can write it as purchase. The value is 172.8. We write the credit trend, but we are not writing the debit trend. I'll tell you why, right? Then 14th of July, don't write. Products 336. You open count call products at the same time when we purchase date, we write as purchase 336. Then 17th of July, A levies 624, right? We open another account call A levies 17th of July as purchase 624. 30th of July, J Meta 86.40, J 30th July purchase 86.46, right? At the same time, we write it. At the end of the month, in purchase invoice, actually the best word is like this in here. At the end of the month, we do like this. Right. So we, at the end of the month, we get the total in here. You can see the total is in here is, the total is in here 1219, 1219, 121920. 30th of July, we write it as debited to purchase account. That's good. Debited to purchase account. Right. So in nominal account, we open an account called purchase account. Right. Purchase account. Right. So when we write in here, right. So we put the month end date. Why? I told you there can be one debit entry and many credit entries, but the total should be tallied. So we wrote the total, right? 121920, right? In here we write it as creditors. Why? You can see purchase account debit, relevant creditors or the trade payables account credit. Send me a thumbs up if this clear. The total in here is also 1219. In here also the total is 1219. Hope it's clear to you. Send me a thumbs up, right? Send me a thumbs up. One debit entry and 4 credit entries, but the total is tally. The total is tally, right? Purchase account comes to the nominal account, payables account comes to credit ledger, payables ledger account. Now you can see, right, how we recorded. So the double entry you can see, right? So each supplier's account in payable ledger, right? So double purchase paybook, uh, transactions, posting to ledger, as like this. How we do? Purchase account debit, purchase account debit, right? In here we write it as at the end of the month, at the end of the month, right? Relevant creditor account, credit, right? On the transactions date, on the transaction date. Purchase account debit in the nominal ledger. Creditors account credit, receive payable ledger, ledger. That is how it goes. Okay, but in nominal ledger also we maintain one control account. I'll explain it later, right? Okay, write it and raise your hand, right? Or write all the things and raise your hand. This is the full. Hope all good. Am I clear to you guys? Send me a thumbs up. Right? Hope all done everything. Right? Okay. Now the next part, uh, cash and credit revenue. Right? So, which means in here this cash revenue and the credit revenue. Right? So I'll explain it later on. Right? So I think most of the time within this week we can fully, I'll try to cover it out. Right? The next thing, then we can go to the other part. Right? Okay, so this is enough for today. All right. Okay, so this is enough for today. Let's meet on tomorrow, which means Saturday 9 to 12. Is it clear to you guys? Send me a thumbs up. We can meet the Saturday 9 to 12. Just think up to here and come. Out of the all the primary books of original, we finished only the purchase day book. Just remember. In here, write another thing as in purchase day book, in here the same purchase day book, we record all the credit purchases of credit purchase of goods. Right? In purchase day book, we record all the credit purchase of goods mean the stocks. Right? Only those, not the other thing. Like when the business purchase a motor vehicle on credit basis to the business usage, we don't record in here. Right? So in purchase day book, we record all the credit basis, credit and risk goods purchase. Purchase day book, we record all the credit basis goods purchase. Right? In purchase day book, for the purchase we record all the credit purchase of stocks or the goods. Are you okay up to here, guys? Send me a thumbs up. Right? Hope all done. Right? Okay, let's meet on tomorrow night. Name. Thank you for the participation. Bye. Sarna, God bless.
Bye, sir. Thank you, sir.
Bye.
You, sir.
Bye.